In this video, let's dig into the clergy housing allowance. The housing allowance is one of the most helpful tax benefits for pastors. It allows you to exclude part of your wages from federal income tax calculations when spent on housing and related expenses. Because housing and related expenses represent a significant part of most family budgets, spending money on housing can save you hundreds or thousands on your tax bill. But, as with all tax matters, there are rules you need to follow to ensure you're taking full advantage of this benefit. In this video, I will discuss how the housing allowance works and what to watch out for. First, it's important to remember that the housing allowance is excluded only from federal income tax. If a pastor makes a salary of $50,000 and can exclude $30,000 of qualified housing expenses, he will only have $20,000 of taxable wages for calculating federal income tax. But the 15.3% of self-employment tax for Social Security and Medicare is still calculated on the full $50,000. Now, let's discuss how the housing allowance designation process works. Your church's process may not flow exactly how I describe, so check with your payroll administrator on the exact process if you aren't sure what to do at your church. The first step is to determine the amount you want to designate. Near the end of each calendar year, each pastor should evaluate their planned spending on housing expenses for the following calendar year. You should include all expenses required to maintain your house, including rent or mortgage payments, utilities, repairs and maintenance, furnishings and appliances, property taxes, homeowners insurance, and similar expenses. For a more thorough list, download my planning spreadsheet below this video. Be sure to build in some margin. Higher estimates are usually better. In fact, once you estimate your housing expenses, I would add 5 to 10% more for anything that pops up that you didn't plan for. The next step is to make a formal request from your church for the amount you calculated. This will be considered your designated housing allowance. Most churches have a specific form you will complete to make the request. If your church doesn't have one, you can also download a template for this below the video. Once the church receives your housing allowance request, the board or a designated appointee will review and approve the designated amount. Then, upon approval, the payroll administrator will set up your approved housing allowance amount in the payroll system so that your total salary is broken down between the taxable wages and the excluded housing allowance. As you go throughout the year, be sure to save receipts or documentation for all housing expenses you incur. To keep it as simple as possible, on your receipt, highlight any expenses that qualify to be excluded as housing allowance and put them all in a folder to save for tax time. From time to time, it is also wise to review your pay stubs and ensure everything is on track. Payroll mistakes happen, and catching them early will save everyone a lot of work. At the end of the year, the total designated housing allowance amount should appear on your W-2 in box 14. It is only informational, so if the box is empty, your payroll administrator should be able to get you the final amount. Note that the final amount at the end of the year may differ slightly from your requested amount due to other payroll complexities such as unpaid time off, changes in pay rates, adjustments to pay schedules, and more. You will also need to add up all of your receipts to see how much you actually spent on housing expenses. This number will be compared with the amount you designated on your annual request. But there is one other number you will need to consider, and that is the fair market value of your home, including furnishings and utilities. This calculation is more of an art than a science, and I've seen different tax preparers using different methodologies to calculate it. One simple way is to use the rent Zestimate from a site like Zillow.com, add your actual spending on utilities, and add a little more to that number to account for the fact that Zestimates are usually for an empty rental. Furnished rentals have higher rates. Others have proposed using 1% of a home's value, but market fluctuations can drastically change this number. Comparing a few calculations, will likely produce the best estimate. Be sure to document how you calculated this number. Now you should have three numbers available to you: the amount officially designated as your housing allowance by your church, as reported on your W-2, the actual amount you spent on housing from your saved receipts, and the fair rental value of your home, including furnishings and utilities from a source like Zillow.com. The lowest of these three numbers is the amount you can exclude from your wages when calculating your federal income taxes. The easiest way to understand this is to look at an example. Let's say Pastor Joe's church designated $25,000 as his housing allowance from a $50,000 salary. At the end of the year, Joe added up his housing receipts and found that he spent $22,000 on housing expenses. The fair market rental value of his home as a furnished rental was $23,000. Pastor Joe can exclude the lowest amount, which in this case is $22,000. The remaining $28,000 is considered taxable income. Though his employer only reported $25,000 in wages to the IRS, the remaining $3,000 that should be taxable earnings must be self-reported on the Form 1040 when he files his tax return. Most tax software will handle this automatically if the data entry is done correctly. Now, before we address some common questions, there are some other important considerations. First, while you can change your requested housing amount mid-year, you must request the housing allowance designation before you receive the income or pay the expenses, and it must be officially approved by your church. You cannot retroactively designate income as a housing allowance. Second, it is important to note that the amount you choose or spend may have an impact on your eligibility for tax credits. I recommend finding a tax professional who can help you run scenarios to make sure you are choosing the right amount. More is generally better, but not always. And third, because the housing allowance is only excluded for federal income taxes, remember that it is still included in the calculation of self-employment taxes. Now, over the years, there are some questions I have commonly been asked about the housing allowance, and I'd like to address some of those proactively here. The first question is this: do I have to update my housing allowance every year? And this depends on the form you use to make your requests. The forms will usually specify the year of the designation, and I recommend ensuring it includes a clause that indicates you wish to keep that amount in future years unless otherwise directed. What if I became a pastor in the middle of the year? In this case, you can designate your housing for the remaining part of the year. It is important to work closely with your payroll administrator to ensure you understand how the calculation will work. In most cases, you would still provide an annual total, and the payroll administrator should divide that number by the number of pay periods in a year to get the per paycheck amount. You can take that per paycheck amount and multiply it by the remaining pay periods in the year to see the amount of your designated housing allowance for that tax year. What if I live in a parsonage? Individuals who are provided with a parsonage may still want to take a portion of their pay as a housing allowance. You may want to purchase new furniture, pay for utilities out of pocket, or incur other housing expenses. Can I claim my whole salary as housing allowance? While you can designate your entire salary as a housing allowance, there may be limits based on your payroll software, so consult with your payroll administrator on this. Most payroll software needs enough money included as taxable wages to withhold taxes or benefit contributions. There is no specific limit imposed by the IRS. Can I have a housing allowance if I am part-time or get paid hourly? Yes, you can. The calculation can be a bit tricky, but there is no rule excluding a part-time pastor or one paid by the hour from being eligible for a housing allowance. The only requirements are that you are licensed, commissioned, or ordained, and perform ministerial work.